Happy Friday, everyone. Jeremy Ritz here. Welcome to the Traders Podcast, episode number 51. And are we in a recession or is this tariff stuff just noise? We're going to recap this week's roller coaster. The S&P 500 in bear territory, up 62 points, choppy, volatile, crazy. Let's get into all of it. Traders Podcast, episode number 51. All right, so I hope everybody has had a great week out there, and maybe not so much of a great week in the market because it has been intense. If you are a trader like I am, you saw these massive moves. I posted a short earlier this week about those 100-point pops, 200-point pops, 300, 400 points. And, these are moves that you would typically see in the past and be like, wow, that's just an amazing push, higher or lower. But when you're getting those all compacted within a week, it just makes for insanity. These are historical type moves. And if we go back to Wednesday, we saw that epic rally, the bull rally on Wednesday, whenever Trump announced that 90-day pause on tariffs. And what happened the day after that is the market sold down at one point, 300 some points. It almost triggered circuit breakers, which means they'll halt trading. The SPX was near 7% down. And when that happens, if it sustains itself down around that area, they will actually halt trading. That didn't happen. But more importantly, it's just the volatility and intensity of these moves. And if you look historically, when you have those big type of monster rallies like we saw on Wednesday, those are characteristic of bear markets. And we have entered bear territory. Now we're off of the lows, but on the SPX, we got down about 21%. We're up today as the time that I'm reading this, but it's tariffs that are spooking the market. And why? Because it creates uncertainty. And you heard me say this several times, that until there is some concrete outcome with negotiations with China or with these other countries, or until we see what this tariff impact looks like on the data for companies, or in terms of employment, the labor force in the US, or in terms of inflation. Today we got Michigan consumer sentiment, and the expectations for inflation is now projected to be over 6%. So consumers are feeling fearful. They're feeling scared, and they believe that inflation is going to go up in the near future as a result of these tariffs. And so what's happening is, because there is this uncertainty, you're seeing panic. You're seeing these massive sell downs. And the market is so sensitive that whenever any good news comes about, like we saw on Wednesday, you get rocket ships, right? I mean, that day was just insane. But their true relationship that we really have to watch and monitor is the US-China relationship. And President Trump announced additional tariffs on China. China retaliated 145% tariffs on the US, but they acknowledged that even if the United States raises tariffs on them, again, they're not going to raise their tariff anymore. They're just going to stay the same. They're willing to negotiate, but it's almost at the point where it's who's going to blink first. But hopefully cooler heads prevail and some type of agreement can be reached, because until then, we're going to see this just sheer insanity, sheer craziness in the markets. And how long can that take? We don't know. We can't put a timetable on this. But the fact that it was reported that over 70 countries have reached out to the US and have started to negotiate, have started those talks, we can have some optimism that will begin to hear deals announced. And if some type of an agreement can be reached with some of these more prominent countries that have been discussed here in the recent few weeks, Mexico, Canada, the EU, then you would see that come into the market with upside moves. And if the China agreement gets taken care of, then I think there is a true opportunity for us to push back up to all-time highs. And interestingly enough, today, the banks reported earnings, and I talked about how that was going to be an important day for the markets. And Larry Fink, the CEO of BlackRock, talked about how he thinks that the US is headed for a recession and quite possibly may be in a recession at this point in time. But he talked about also how this market weakness, the strain that's being put on the economy, the strain that's being put on inflation and the pressure on the labor market is self-induced as a result of these tariffs. And again, once that resolution is achieved, we'll see some semblance of stability and balance, and markets more than likely will resume their lift higher. But now, what we have to pivot to and look at, and really it started today with BlackRock reporting, Wells Fargo, Citibank, JP Morgan Chase, and they were all positive earnings, right? Everybody's acknowledging that we probably are in a recession or are headed for one, but that's really no secret. I think that's been priced into the market. But next week, we're going to shift over to other companies who will be reporting. And I mentioned this in a short this week that Netflix will be reporting on Thursday. And that's really going to set the stage for the big boys of tech who are going to be reporting in the coming weeks. But I'm definitely watching Netflix. They report on Thursday at 4 p.m. to see what their CEO is saying about tariffs and what type of impact that will have on them. Now, for a streaming service, you wouldn't think that there would be a significant impact, but there is pressure being put on the consumer in terms of what they're spending. And do we see the consumer pull back? And do we see them cut discretionary spending? Or do we see them downgrading their subscription packages, meaning they go from a higher tier Netflix package down to the ads version that's, I believe, $7.99? And how does that cut into the bottom line? So I'm interested to see that take from Netflix. And then the following week, we start getting into the big boys, your Mag 7s, your Teslas, your Apples, Microsoft, Google, Meta, and we're going to learn a lot about that. And so earnings reports and how CEOs, the leaders of these companies, are talking about tariffs, what they see, are they pulling their guidance? Are they pulling their forecasts? That's going to be really the catalyst for what the next move in the market's going to be. And I talked about that last week. That was the whole Traders podcast, was about how earnings could be the next leg lower. But to contradict that, has the market already priced that in? We don't know. And obviously, we need more data. We need more information to be able to draw that conclusion. But there is a chance that that has happened. But based on the volatility this week, it doesn't seem to be that way. So who knows? But in other news this week, we also got good economic information in terms of the consumer price index, CPI, that was yesterday. And the numbers came in cooler than expected. And remember, that's the inflation report. So we saw inflation tick down rather significantly in comparison to previous reports. And then today we had the producer price index, which is how much these large businesses in general, are paying for materials. And that was cooler than expected. But what is crazy is typically when we would get this data in the past and it would be positive or indicate that inflation's cooling, we would see a subsequent rally in the market. And we didn't see that this morning. We saw a little bit of a pop higher, but then the market sold off. And if you go back to Thursday, yesterday, whenever CPI came out, again, better than expected numbers, and the market sold off. And the question is, why is that? Why is the market not following suit with what it did in the past in relation to positive inflation reports? And again, it all comes back to what we talked about at the outset of this episode. And that is, tariffs are the dominant force in the market at this time. And even though inflation is showing that it is cooler at this moment, that's not factoring in the inflation that tariffs potentially can cause. And so whatever respite right now this data is showing in terms of inflation, that doesn't mean that that's going to hold true, because more likely is that inflation is going to rise. I mentioned that consumer sentiment data and their inflation expectations, 6%. It's no coincidence. It's a result of tariffs. And so until we get clarity, who knows how much the economic data is even going to matter. Right now, this market is 100% about tariffs. And again, markets hate uncertainty. Now, keep this in mind for next week, and I'm not even sure how much power or effect this is going to have either. But Jerome Powell will be speaking on Wednesday. There's no Fed meeting this month. There's no rate decision this month. It'll come in May. We'll see if there's going to be a rate cut. I think at this point, we can expect a rate cut in May. At the start of this week, the market was pricing in 5 rate cuts. But I'm interested to see what Jerome Powell's going to have to say on Wednesday about what is transpiring in the markets with these crazy volatile moves, and especially about what's happening in the bond market, which is a whole nother topic. And I'll have a video coming about that next week. But Jerome Powell typically has had an impact on moving the markets. We didn't see that so much last week, but next week on Wednesday, I want to see how sensitive the market is to what Powell has to say. And he's in a difficult spot because he's not able to utilize quantitative easing, which means printing money and pushing it out into the economy. He can't do that because of the inflationary components of tariffs. So he's pretty much tied. His hands are tied right now. And even still, cutting rates is not going to keep inflation in place. It could make it go higher. So there's the concern that if they do cut in May, which it seems like they will, is that going to make inflation go higher? And so with easing rates on top of tariffs, does it just create a scenario, a worst case scenario, where inflation gets out of control? So I'm really looking forward to his conversation and discussion next week in his speech. That's on Wednesday, and looking forward to see what he has to say. But I wanted to close with this in terms of if you're a trader in this market and how best to play it. And my approach still is I'm not fully going long yet on long-term positions, swing trades. I'm nibbling and slowly acquiring shares, but I'm not going with massive position size just yet, just because I don't believe we have truly bottomed. And not only that, with all this volatility that is out there, it's just too unpredictable. And so the strategy that has been working for me right now, at least as a day trader, are quick scalps in and out. Whenever I see momentum on tickers, I jump in, I ride the momentum quickly, and I'm out. And I'm using tight stops when I do that. But the other thing to keep in mind too is we are seeing these crazy significant moves that are coming off of news related to tariffs in both ways. Whenever there's something about a new tariff being implemented or tariffs increased on China, you're seeing these huge sell downs. If you're able to be ready for that and have the awareness or a news source deliver that to you, and you're able to catch those moves, or conversely, whenever some good news comes out, like the 90-day pause, and if you could catch one of those moves, you could potentially put yourself in position for a significant profit, right? Obviously, you have to have your stop in place. You have to have a profit taker so you can capture it. But something I would encourage you to do is go back and back trade, back test this week in the broader markets and on the tickers that you trade, and look at those moves that came off of that news. And is there anything that you could pull from that that can benefit your trading? So I'm strongly encouraging you to do that this weekend as you're prepping for next week and what should be another crazy week in the markets. But the more prepared that you are, the better position you're going to be in to take advantage of what the market is presenting, which is just extreme volatility right now. And so that's going to do it for episode number 51 of the Traders Podcast. I appreciate you watching this brand new episode. Subscribe to this channel, please. I'm trying to get to 1,000 subscribers by the start of fall. So that's September 2nd, right? The day after Labor Day. So please smash that subscribe button. And if you want to learn about recessions, please check out this most recent video that I did on what a recession is so that you are informed and you can look for these signs as you go about your day in everyday world to see, hey, is the US currently in a recession? And I will see you back here next week for another edition of the Traders Podcast, episode number 52. This is Jeremy Ritz signing off and saying, make it a great day.